welcome to the Doe Show, everybody. Happy Tuesday. How you doing? I'm Dustin Tibbetts, financial advisor with Jazz Wealth. We specialize in managing retirement accounts, long-term investments. We manage our own portfolios. We have 6 of them publicly published on our website at the moment, with a 7th one, 8th one, and 9th one coming soon. One of those happens to be a real estate investment portfolio where we sort of diversify amongst all the different types of REITs. And so it occurred to me that maybe some of you don't know what REITs are or specifically how they work. And so we're going to make a really short class today on defining those real estate investment trusts and exactly how does it all work? How can you work with it if it's something you're interested in? Now, we're also going to be starting a new show, I believe next week, if everything's on track, if we can push everybody fast enough. It's going to be called Defining Your Doe. It's going to be really short, like 2-3 minute clips on one specific topic, defining it top to bottom, but really short with those quick videos like we used to do. So those of you that just want to learn a brief topic real quick and move on, you can do that. And then, of course, if you like the live show, you can come join us here at the Doe Show. And then we have the closing beat at 5 o'clock every day, which kind of an interesting day today, by the way. You want to pay attention to that because there's potentially Elon Musk getting hacked on his Twitter account. If it's not a hack, then it is by far the worst corporate decision or worst decision a CEO's ever made. We'll go over that, of course, at 5 o'clock, and we'll check that out. So what is a REIT? Now, if you can't, if the audio is not very good, it's REIT. R-E-I-T, and it stands for Real Estate Investment Trust. And basically what it means is if it's a company that has gone public that participates in real estate almost exclusively, right? So 75% of everything that they do has to come from real estate, and I believe 95% of it has to come from their income has to come from real estate activities. So what they do is they start a REIT, and typically it's a pretty focused one. Maybe it's buying apartment complexes. And so this company says, hey, give us money. We're going to go buy apartment complexes, and then in exchange, we will let you participate in the growth. So a real estate investment trust is a great way to participate in real estate of some form without actually having to be the landlord, without having to actually go manage properties, find them, buy them, maintain them, all that sort of nonsense there that a lot of you don't want to deal with. Now, from a retirement investing standpoint, we wanted to offer this sort of package here at Jazz Wealth also. Now, they're not our REITs. We're obviously choosing from the list of available REITs, but we wanted to offer that because it's a great way to diversify. And if you don't know, we actually have a lot. We have about 24 different portfolios that we have that we're trying to get approved and put out there to the public. And Real Estate Investment Trust was one of the ones that's hopefully approved here very soon. And so we'll be publishing that. Now, it's a great way to diversify because you technically are buying physical real estate. No matter what somebody says, where they go, oh, you're just buying a piece of paper, you don't actually own the real estate. You actually do own the real estate, and I'm going to prove it to you. So real estate investment trusts, they do not pay federal tax. They do not pay state tax, local income tax. They don't pay anything because they're buying real estate. And the rule is if they are going to not have to have that tax rate, not pay federal tax, not pay the state tax and everything, they have to pay out at least 90% to their shareholders in the form of dividends, right? So when you look at this, you look up some of the different REITs out there and you go, holy cow, they pay an 8, 9, 12, 15% dividend. That's incredible. You get all excited, right? Well, in reality, the company has to do that to maintain their real estate investment trust. There's a name for it, the pass-through income tax rule or whatever it's called. So most of them actually don't even flirt with the minimum. Most of them pay out 100% of all of their income in the form of dividends. What does that do? That means that since they pay everything out, there's no need for them to pay tax. They're paying it out to you in dividends, and so they're leaving it up to you to account for your federal, your state income tax, if that's applicable. And so it's going pass through right to the individual. So with this in mind, it means that you are directly participating in the real estate. It's not one of those things where you're just buying a share of something and then you get a little cut of whatever happens. You're directly participating in real estate. So really, really cool there. Now, of course, it's a great way to diversify because asset allocation, remember that video? We said assets include stocks, bonds, real estate, right? It could include gold, other commodities, right? And so by you breaking up your retirement portfolio, if it's necessary, you will have some in stocks, some maybe in bonds if you're close to retirement there. Real estate, now you have a way to participate in real estate when people say you should own some real estate. Now, let's break it down even further. If the price, remember these trade just like shares. So there could be one that is $100 a share, right? Oops. $100 per share, maybe that's one of them. Now you go, well, I don't have $100. Or maybe I have $100 in my account, but by the time I put, 50% in stocks and 5% in bonds or whatever, I don't have enough money to buy one share. Well, we can actually use fractional shares where we can break this up into little pieces. And if you had $25, you'd actually end up owning 0.25 shares of a REIT. So that's what we do for our customers that are just getting started and they have that smaller balance. So you can 100% diversify into REITs if you want. Now here's the cool thing about REITs. Not one is similar to the other. You can invest in anything real estate oriented. So a REIT could include, the most popular one is residential, right? We all understand that more. We have, and that doesn't mean that they're flipping houses, by the way. It means apartment complexes, right? It means anything that, it could be mixed use where it's apartment and some retail in there. And then you have office REITs. You ever go into one of those big skyscrapers and you're like, who the hell owns this thing? Like, how is it possible that one person could own all this? Well, usually it's not. It's usually a real estate investment trust where everybody pools their money, and it could be that that big skyscraper is being rented out floor by floor to whoever it may be, lawyers or doctors or whatever it may be. And then the income, it goes back into the REIT, which then passes on to you. Now you can go even further. You can look at industrial REITs, right? You ever seen one of those big warehouses? I was just in Texas a couple weeks ago and we're driving down whatever highway it was, and it was like monster warehouse after monster warehouse. And then there were little ones, of course, by Texas standards. There were little ones along the way. Well, a lot of times companies don't actually own those warehouses. They're built and put together by REITs, and then they lease them out to those companies. Well, you could participate in that as well. So if you say, well, I don't want to be all in residential, I don't want to be all in office space because the economy, all the different cycles there, I don't want to see all the ups and downs. You could also be in industrial REITs as well. So that's one of them there. Now you can go to retail. You can name a retail REIT, right? Or you can at least understand how that works. Shopping centers. One person doesn't own a shopping center. It's a real estate investment trust. And so then they lease out all the spaces, hopefully to, I don't know, Spencer's or Bath and Body Works and things like that. And they take that income and they pay it out to you in the form of dividends. Lodging is one. You ever go into a hotel, right? You wonder, how is it that Holiday Inn or the Hyatt can have a hotel at every single exit, right? Well, a lot of times the Hyatt didn't actually build that building. They are leasing it. They are operating the hotel. In fact, a lot of the hotel operators, that's the key word, they don't actually do real estate. They are operating the hotel on behalf of somebody else. They're just really good at it. So lodging, that's certainly one way that you could go as well. Healthcare. So you got healthcare places. This could be like senior living centers. You could be investing in long-term care. You could be investing in rehab facilities, things like that. So that's a couple of them. There's actually a real estate investment trust where real estate doesn't exist. It's called timber. You can kind of probably guess what that is. So there's no real estate there, but there are just acres and acres of trees, probably thousands of acres of trees that are eventually going to become wood, paper, and etc. And so that land, right, generates revenue from the timber, and you could participate in that as well if you like. And I guess, unless I think of another one, self-storage. You ever drive somewhere and you just see the rows of those orange garage doors or green garage doors? Those are real estate investment trusts too. Now, a lot of times those are individually owned, but there's a lot of big companies that's what they do. They go build these massive sort of storage spaces, and they do that, right? That's their thing. And I'll take it even a step further. You've got pot. Remember when that was popular? Everybody's looking at crypto now. They don't care about pot. But that was a big deal for a while, where companies were not investing in marijuana or production or anything, but they go, wait a minute, these people are going to need facilities to manufacture said marijuana, right? And so they were buying like warehouses and stuff, reconverting old warehouses so that these companies could actually be a part of it. And so that is just a quick overview of real estate investment trusts. There are a ton of them, right? And so the portfolio that we have here at Jazz Wealth actually is going to have a mix of about 30 to 35 of them. We're at 30 right now. We're hoping to add a few more, with the idea of we want the biggest and baddest, right? We don't want to get you in some random one. We want to have the best of the best to move our portfolio at a certain speed, because remember, we move for speed. Now, I will use Financial Investor's comment there, and I will say, go back to our video where we talked about having the right investments in the right accounts. Having a REIT in the wrong account will cost you more than it's worth over the long run, especially as your balance grows. So you want to make sure that you have it in the right account. Okay? Well, I hope that helps. I'm going to wrap it up. We'll be back at 5 o'clock. Seems like we've got some interesting topics today with what's going on with Tesla. I hope that's fake, by the way, guys. I really, really hope that's fake. And I'll leave you with this. Tonight's Wine and Wealth for our customers, it may have to be recorded. I didn't forget my anniversary. I simply double booked on the day that we were supposed to celebrate our anniversary. So I'll leave you with that, and apologies for messing that up.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.